everybody, Jamie Trull here, your favorite CPA, financial literacy coach, and profit strategist. Today, I wanted to do a very quick video talking to my sole proprietors. And I get this question a lot regarding PPP loans. So we're going to talk about exactly what you need to do to make sure that you get forgiven for your PPP loan as a sole proprietor. So let's talk first about how exactly you pay yourself with a PPP loan. That is one of the most common questions I get from people who do not have employees. You probably got your PPP loan either based off of line 31 on your Schedule C, which is your net profit, or if you got it kind of after March of 2021, you were maybe able to use line 7, which is your gross income number. So either way, it works the same, okay? Either way, whatever was used as sort of your compensation, whether it was line 31 or line 7, that's what you are going to be able to essentially pay yourself. So the great thing, if you don't have employees and you only got this for yourself, is that you can pay yourself the entire amount, okay? I know that sounds crazy. You've probably heard people getting in trouble for loan fraud, for spending it on personal things, and you're confused because, wait a second, I thought I was supposed to pay myself with this loan, and you are. Okay, what you would be using it for in that case is owner compensation replacement. And you can use the full amount of your loan, assuming you got the loan without any employees, to pay yourself, right? Whether you use line 31 divided by 12 times 2.5, that might have been the way that your loan was calculated. Or again, if you got it later, it might have been line 7 on your Schedule C divided by 12 times 2.5. It's considered 2.5 months of payroll for you, however that was calculated. So you can pay yourself that full amount. Now, there are a few important things to keep in mind here, okay? I get a lot of questions about, do I need to pay it out over time? Do I pay it out lump sum? Is there a period of time? Is it 24 weeks? Is it 8 weeks? Is it 11 weeks? So let me first say that from a technical perspective, and what I mean by that is actually transferring cash, in theory, it shouldn't matter, okay? In theory, it doesn't matter when and how you actually pay yourself. Why is that the case? Well, the thing about it is that sole proprietors aren't taxed when they take money out of their business. When you pay taxes at the end of the year and you fill out your Schedule C that includes your business revenue and all your expenses against it, it's calculating tax on the total profit, regardless of whether you kept that profit in a business bank account, you took it out to pay yourself, or maybe even kept it all in a commingled business and personal bank account. I don't recommend that, but however you did it, you pay taxes on the profit. So when you take money out to pay yourself with the PPP loan, it's not a taxable event. So really, it doesn't matter that you took the money out or how you take the money out. However, I am recommending, because of the fact at the very beginning of this, banks were requesting to see that proof of paying yourself to get loans forgiven. I still recommend that people pay themselves in some respect, whether that is a one lump sum transfer when you get it, or whether that's over time, if that makes more sense to you. I do recommend that you actually have that. You will not and should not be asked for proof of that when you apply for forgiveness. Some changes were made back in December in a stimulus bill that was passed that basically says you don't have to really show anything to get forgiven for your loan from the standpoint of proving what you spent it on, okay? You may, if you got 2 PPP loans, you will have to show proof of that 25% decrease in gross receipts. That you'll have to prove, but you won't have to show, or you should not be asked to show proof of, how you spent the money. You will have to attest, however, to how you spent the money. Okay, so that's really important to note. So you shouldn't be asked to show it. I do recommend that people still effect that transfer. Why? Well, just in case you're ever audited, you have proof to say, look, I took everything as owner compensation replacement, and here's where I actually paid myself that money. It's silly. I have a lot of feelings about the silliness of actually making people take that money as payment. If you need it in your business, and this is what I've gotten this question quite a bit, my thoughts are still take it out of your business and record that as you normally would as an owner's draw. And then if you need money back in your business to pay bills and things like that for your business, you can transfer it back in. That's if you want to take the whole thing as owner compensation replacement. Okay, you have different options there. You don't have to do that, but it's usually the easiest thing. The one drawback, however, that I will mention to taking the whole thing as owner compensation replacement is that you then have to have an 11-week covered period, give or take. It's about 10.8 weeks of a covered period. Why? Well, because if you're taking the whole thing as owner compensation replacement, right, and that's what you're saying on your forgiveness application, that yes, I paid myself this full amount, right, then ultimately it's 2.5 months worth of pay. And it would be a windfall if you said, well, my covered period was 8 weeks. Our minimum covered period that you can pick is 8 weeks. But if you said it was 8 weeks, you can't say that you paid yourself the full amount because you can't pay yourself 2.5 months worth of pay over 8 weeks. I know that gets really technical and kind of silly when you're talking about paying yourself, but it's important to note. And it's important to note because when you go to fill out that application for forgiveness, you're going to be asked what your covered period was. And you want to make sure that you put the right dates in there such that your loan can be fully forgiven. Okay? No sole proprietor should be partially forgiven. Everybody should be able to get full forgiveness. You just need to be able to to be aware of what you need to put in on your application. Okay? So the covered period, let's talk about that for a minute. Your covered period starts the day that you get the money, and it ends anywhere from 8 to 24 weeks. It doesn't usually make sense for sole proprietors to do more than, say, 11 weeks. There's really no point to it. The end result is the same. So I usually recommend, sole proprietors who want to take the whole thing as owner compensation replacement say that they used it over approximately 11 weeks, 2.5 months. Okay, so you take the date you started, and then you'd calculate out roughly 11 weeks from that date, and those are the starting and ending dates you would put on your application, and then you would put in the payroll amount as the full amount of the loan. You also have the option to take a portion of it for other costs. But again, there's not really a huge benefit to that. The only real benefit to that is if you wanted to get down to that 8-week covered period because maybe you got your second loan right at that 8 weeks. In that case, you would only be able to take a portion for owner payroll. You need to take at least 60% for owner payroll. But then the other 40% you could use for other expenses in your business. What are other eligible expenses? Well, it could be rent in your business utilities, maybe business insurance, software. There's a variety of different costs that you could have in your business that would be eligible. They expanded it. So at first it was very, very narrow. Now that has been expanded to a lot of those ongoing costs in your business being able to count. So in that case, you could instead say, well, 60 or 70% of it maybe went to payroll and the other, call it 30%, went to these other things. So one other question I get all the time is from people who maybe want to keep that covered period to 8 weeks for whatever reason. Maybe they have a second loan that they got on the back end, and they're trying to maximize how much they can take as owner compensation, but still stay at that 8 weeks. Well, if you want to do that, then the maximum owner compensation that you can have and still use an 8-week covered period is right around 74%. Okay, it's a hair under 74%. It's about 73.8% if you actually work out the math. I know that sounds like a crazy number, but when you actually work out the percentages with what you're taking, that is how the math works out. So you can go all the way down to 60% if you want to and still use that 8 weeks, but anywhere between 60 and 74% in owner compensation replacement will allow you to use an 8-week covered period. Anything more than that, and it's going to have to be somewhere between 8 and 11 weeks, right? So that's just really, really important to know. Again, that doesn't mean you have to pay yourself equally over that amount of time or anything like that. That is just what you have to claim as the covered period for your loan in order to get full forgiveness, okay? Now, this is how it works with PPP rules specifically, meaning for what actually impacts forgiveness, it doesn't matter if you pay yourself over time or not. But I do want to give one caveat to that conversation is if you're also getting unemployment. if you are getting unemployment as well, then you need to really look into and talk to your state and see what your state has put out there about the interplay between unemployment and PPP. Oftentimes, you will have to either stop taking unemployment or perhaps claim your PPP over a period of time while you're getting that unemployment, but you claim it as income. So it may reduce or eliminate your unemployment benefits while you are taking PPP. But again, that really ranges based on the state. And some states are a little bit more forthcoming about the rules than others are. Unfortunately, it's one of those areas that's a little bit inconsistent, a little bit gray, but that is where how you actually pay yourself could potentially come into play. So I want to make sure that just to caveat that piece, but when we're talking strictly about PPP and PPP forgiveness, it does not matter, although I do still recommend you actually effecting that transfer, even though it shouldn't matter. It probably won't matter. I still am recommending people do it because I have seen a scenario in which banks and, in some cases, the SBA and things like that, this program was made for bigger companies that have payroll, that are paying employees through payroll, and they've tried to apply the same rules to smaller companies, and it gets really confusing for independent contractors, solopreneurs, because the way that it works for paying yourself is just vastly different from a corporation, right? So that's just something to keep in mind, that sometimes banks don't really understand, and so they might just default to asking for proof of payment of payroll that you don't have because you're not on payroll. So it can be helpful to say, well, here are my bank statements. Here's where I actually transferred the money to myself. Weird, silly, shouldn't matter, but in some cases it might, which is why it's good to have just in case, okay? All right, let me know what else you want to hear about below, what other questions you have about PPP. I'm going to continue to do more videos, and I want to do more videos for you, my solopreneur. So let me know what you want to hear about. Make sure to come join my group, Financial Literacy for Women Business Owners. We'd love to have you over there, jamietrull.com/group. We're talking about all these things and more over there, and I hope to see you there.